strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world.
The dollar came to dominate trade after World War II. The US was the biggest economy in the world. Other countries were trying to rebuild, and the dollar, it was stable.
So how did the dollar become the currency of choice across the world? And more importantly, what kind of a future is it up against?
Hi everybody, the US dollar is by far the most powerful currency in the world. And the US economy is so intertwined with the world economy that a minor fluctuation here and there creates a ripple effect all across the world. That is why every time the Feds hike or decrease the interest rates, every time the US economy goes up and down, it goes on to create headlines in every single newspaper. The stock markets all around the world go up and down, and most importantly, the life of more than 3 billion people gets affected. On top of that, because of the dollar, the United States is able to practice its superpower to such an extent that they could literally uplift or cripple the economy of most countries within a fortnight. So this begs the question, how on earth did the US dollar become so powerful? What exactly was the strategy deployed by the presidents of the United States that gave America an unprecedented power over the global economy? And lastly, what are the study materials to help you understand the intricacies of currency wars better? This video is brought to you by Vested, but more on this at the end of the video. This is a story that dates back to 1940s, and by this time, the world had already witnessed the World War I and the World War II was at its peak. And as we all know, the British Empire was the superpower during that time with their vast colonies all across the world. But by the time they fought World War I and World War II, most of their wealth had deteriorated. In fact, by 1920, that is right after World War I itself, the condition of British economy was so bad that they went from 0.62 billion pounds of debt in 1913 to 7.8 billion pounds in 1930, which is from 25% of its GDP to 130% of its GDP. And this was the case with all major countries all across the world, including France and the Soviet Union. And the catch over here was that the United States government was so smart that they engaged in these wars first as war merchants and then as war participants. Now what does this mean? While all the big empires were busy fighting the war and dedicating all their manpower and resources towards warfare, the United States used all of its capital and manpower into becoming the major supplier of cotton, wheat, brass, rubber, automobile, machinery and thousands of other goods to the world. As a result, the United States experienced one of the greatest economic booms in the world. The total value of US exports grew from just $2.4 billion in 1913 to $6.2 billion in 1917. And the same thing happened in World War II also, wherein the United States became a war merchant and entered the war only after Pearl Harbor. I'll explain this in depth later, but for now, all you need to know is that by conducting a business out of two of the most expensive wars in world history, the United States made so much money that while every other country's economy was devastated, the United States had 75% of the entire world's monetary gold. And if you look at this graph, you will see that their gold reserves went from just 2,000 tons in 1910 to almost 20,000 tons in 1940. This is when the US took the opportunity to gather 44 countries all across the world to sign something called the Bretton Woods Agreement in 1944, whereby 44 countries agreed to peg their currency against the dollar, and the US dollar was ultimately pegged to gold. Now the question over here is, why did these countries sign the Bretton Woods Agreement and what exactly was their benefit? Well, firstly, the Bretton Woods Agreement said that they would back the dollars with gold such that 1 ounce of gold would be worth $35. As in 28.35 grams of gold would be worth $35. And they said that if you own the dollars and come to us, we would redeem its value in gold. As in we would exchange the dollars with the gold. So this way, it became extremely convenient for countries to do trade with each other even if they did not trust each other's government. For example, when Indonesia got $1 million from Pakistan, even if Indonesia did not trust Pakistan, they know for sure that the $1 million that they got could be exchanged for gold with the US. So it was definitely worthy. Otherwise, if they do trade with Pakistan in Pakistani rupees, today 10,000 Pakistani rupees might be worthy of buying 1 gram of gold. But the next week itself, if Pakistan prints more money and declares that 20,000 Pakistani rupee will buy you 1 gram of gold, do you realize what would happen? The entire value of trade with Indonesia would actually collapse. Moreover, if Indonesia wants to use Pakistani rupees, then if other countries do not trust Pakistan's economy, then that money again could not be used for trade. But if the same transaction happened in dollars, the United States guaranteed the value of dollars with gold. So you could trade with any country with the US dollars and be rest assured that it could be used to trade with any other country to buy any other commodity. And secondly, the Bretton Woods Agreement led to the formation of two major organizations. The first was the World Bank and the second was the International Monetary Fund or IMF. And since most of these countries were devastated by two wars, they desperately needed loans to rebuild their economy. So with the funding of the United States, as you can see, the World Bank issued huge sums of loans to help these countries get back on track. And thirdly, these countries had the benefit of IMF facilities. So while the World Bank gave out long-term loans for development, IMF keeps track of the global economy, it assists policy makers, and most importantly, it lends money to countries with balance of payment difficulties. This is the reason why even today, countries like Pakistan and Sri Lanka are seeking help from the IMF to come out of economic crisis. This is how the Bretton Woods Agreement sealed the importance of US dollar and gave the United States a huge leverage over other countries. This was the first phase of the establishment of US dollar dominance. If this is very clear to you, let's move on to the second phase, and that is a love affair of the US dollar with oil. This is again a story that dates back to World War II, and during this time, while Russia, Britain and US were busy fighting Germany, Italy and Japan, the Arabs in Saudi Arabia were just chilling in the desert and had nothing to do with war itself. In fact, they didn't even know that they were sitting on the largest black gold mine in the world. And during this time, that is during the 1930s and 40s, American and British companies were serving the entire world for oil. And only these companies actually had both the technology to extract the oil and the acumen to use it for world trade and development. This is when in 1938 an American-owned oil well in Saudi Arabia drilled into a huge source of oil reserve. Meanwhile, the Saudis were not at all rich back then because they had just started producing oil. But during the war, Italy dropped multiple bombs on Saudi to target the American facilities in that region. And because of this attack, the Saudis struggled to produce oil at full capacity. So the Saudis desperately needed more protection. And this is when Franklin Roosevelt, who was the then president of the United States, saw the insane levels of development all across the world during war. And he realized that the key to this and the next 5 decades of world development lies in just one commodity, and that is oil. So you know what? He held one of the most important meetings in world history with the King of Saudi and made a deal in 1945 that would change the fortunes of US dollar forever. The question is, what was this deal? Very simple. The US offered to protect Saudi Arabia from any future attacks and provide them with all military equipments, and in exchange, he asked the Saudi king to sell oil only in US dollars. And guess what? As it turns out, the Saudi well that the Americans were digging was the largest oil well in the world. And from there onwards, the rise of Middle East started. And by 1960s, after OPEC, all oil exporting countries started selling oil in dollars. Now the question over here is, why was this selling oil in dollars such a big deal, and how did this meeting make US dollar the most powerful currency in the world? Well, this is where the third phase of the rise of dollar comes in, when dollar became the king of all currencies. Now people, do you remember what was the Bretton Woods Agreement? It said that if you peg your currency to the dollar tomorrow, when you get us US dollars, America would redeem its value in gold. But guess what? By 1970s, the US economy had reached such a pathetic state that the gold reserves had fallen from 22,000 tons in 1950 to just 10,000 tons in 1970. This was because of multiple reasons like Vietnam War, gold price hikes, US liabilities, etc. But long story short, the US gold reserves were so low that they could no longer afford to keep exchanging gold for dollars. And this is when President Richard Nixon declared a temporary suspension of the dollar's convertibility into gold, and the Bretton Woods system had collapsed in 1973.
We must protect the position of the American dollar as a pillar of monetary stability around the world. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets. The effect of this action, in other words, will be to stabilize the dollar.
So now, all the countries were free to choose any exchange arrangement for their currency except pegging its value to the price of gold. So now, One of the most important factors for the value of a currency was not gold, but its application, as in what could your currency buy you in the global market and from home. And what could the US dollar buy you? Well, it could buy you the most valuable commodity of the century, and that is oil. So most of the countries by default held on to their forex reserves in US dollars so that they could buy oil from the Arabs. But at the same time, other currencies like euro, yen and yuan began to rise in world trade. On top of that, now, European and American banks came up with something called the Society for Worldwide Interbank Financial Telecommunications, or the SWIFT network, to make trade payments. Now the question over here is, just because these countries are using the US dollar and just because they're using the SWIFT network to make payment, how the hell does that make US a superpower? Well, the answer to that lies in the working of the SWIFT network. And if you remember from our RBI case study, we explained how do international payments actually work on the SWIFT network. So if you know this already, please skip to this timestamp. And for those who don't know, here's a very simple explanation of the same. You see guys, the SWIFT network usually involves 6 different entities. These are the Indian trader, Indian bank, American bank 1, American bank 2, foreign bank and foreign trader. Now the highlight over here is that the Indian bank will have an account in the American bank where it has its money in dollars. Similarly, the Sri Lankan bank will have a bank account in American bank too, where again they will store their money in US dollars. And just like the Indian and Sri Lankan bank, banks from all across the world have their bank account with the American banks, wherein they have their money stored in dollars in order to make trade payments in US dollars. This is the reason why you will see that almost all the banks in the world have an account with a US bank. So let's say Reliance wants to import minerals worth 1 crore rupees from Sri Lanka. So what Reliance would do is, they would give the Indian bank 1 crore Indian rupees and ask them to pay the same amount in dollars to the Sri Lankan trader's account in the US. So now that Indian bank has 1 crore rupees in its Indian account, it would send a message to its dollar account in America to send 1 crore worth of dollars to Sri Lanka's bank's dollar account in the US. In this case, assuming 80 rupees to dollar to be the exchange rate, $125,000 would be transferred from the Indian account in the US to the Sri Lankan account in the US. And now that the Sri Lankan bank has $125,000 in the US account, it would pay the Sri Lankan trader the equivalent of $125,000 from its account in Sri Lanka. So assuming the exchange rate to be 350 between dollars and Sri Lankan rupee, the Sri Lankan bank would pay 4 crore 37 lakh 50,000 Sri Lankan rupees to the Sri Lankan trader. This is how the SWIFT network works. And just like Indian and Sri Lankan banks, today more than 200 countries trade with US dollars and have their forex reserves with the American banks. And the catch over here is that if a country has $100 billion in forex and spends only $20 to $30 billion in import and export, they would still have $70 billion in surplus, right? So guess what? Just like we avoid keeping a lot of savings and invest our money in stocks, these countries invest their excess foreign reserves in US treasury bonds. And just like government bonds, this is a mega bond whereby countries are lending billions of excess dollars to the US and expect a return after maturity. And if you look at how much this amount is, it will freak you out. As of January 2022, while Japan had 1.3 trillion US dollars in US securities, China holds 1.06 trillion dollars and UK holds 608 billion dollars. In total, the United States has 7 trillion dollars held by foreign and international investors as of September 2021. This is so much money that it is more than the GDP of France, India and Russia combined. So with this insane amount of cash, US has an unfair advantage to build its economy, develop its military, extend loans to other countries, fund the World Bank and eventually command an extraordinary power over other countries. On top of that, if any country does something that they do not like, they could just freeze their forex accounts and prevent them from trading with other countries. And this could practically cripple a country's economy within a fortnight.
Today, Treasury took action against Venezuela's state-owned oil company, PDVSA, to help prevent the further diversion of Venezuela's assets by former President Maduro.
So today, I'm announcing the first tranche of sanctions to impose costs on Russia in response to their actions yesterday.
And if you remember, this is how the US froze $300 billion of Russian foreign reserves. This is one of the most important reasons why the United States is hailed as the most powerful country on the planet. Apart from that, there is the military strategy of the United States, but we'll talk about that in another episode. But for now, let's move on to the study materials of this case study. Before we move on, I want to quickly thank our partners of this episode, and that is Vested. People, during all this drama, just like other countries, even India needed US dollars, and the rupee that had artificially been pegged to the dollar at 17.5 rupees pre-liberalization quickly and steeply got devalued. What's interesting to note is that since 2019, the rupee went from 70 to 80 rupees per dollar, but our dollar reserves doubled to over $642 billion as of September 2021. And the rupee will always have a weakening bias against the dollar, as India is a current account deficit country, meaning the demand for dollar is constantly outstripping the supply. In such a situation, what can you do as an investor? You can actually diversify your investment portfolio to include US companies in your portfolio, and you can easily do that through Vested. Vested gives you access to 1500 plus stocks, ETFs and curated basket of stocks called VES. It also allows you to do fractional investing, as in you can buy shares of Apple, Google or Tesla for as little as $1. The best part is that you get the lowest exchange fees with Vested Direct. So if this sounds useful to you, download the Vested app using the link in the description and get $10 in your account and start your investment journey with US stocks. Moving on, the first thing I'm attaching is a Bretton Woods agreement itself that will help you understand the power of United States after World Wars. Secondly, I am attaching Deepak Shanai's article that I actually referred to during the RBI case study to help you understand how international payments actually work and how now India and Russia will be trading using walkthrough accounts. And thirdly, I'm attaching simple explainers to the Nixon shock, the petrodollar and petrodollar recycling. So have a look at all these study materials and do let me know what you think about them in the comment section. That's all from my side for today, guys. If you learned something valuable, please make sure to hit the like button in order to make YouTube Baba happy. And for more such insightful business and political case studies, please subscribe to our channel. Thank you so much for watching. I will see you in the next one. Bye bye.